Good morning, everyone, and welcome to the European crossover webinar. And it's NFP day today, and we are seeing the cash dollar index going and continue to pare back. The whole thing with the China round, I think it's probably starting to impact the cash dollar index, where the market may start to see that as a concern, especially after we rallied up here. Probably, maybe the market may be thinking once we get up here, well, things can get a little topsy-turvy looking out. So certainly might have some people just start to be wary of that, and maybe to better, for lack of a better sense, maybe stuck somewhat in the positions. We've seen the dollar yen continue to go in and sell off. We've been looking for 630, but I thought over the course of maybe, a couple of weeks or so, not 2 days. And you can see that it certainly looks like we're heading for 630, the 78%. You can see that here after tagging that pivot at 927. So things, the wheels really have come off the caboose, so to speak. If you look on here, the equities, they've really come down quite a bit. So certainly has the market quite on the defensive at this point. But as I said, today is NFP day. Boy, I'm glad it's the end of the week. It seems like it's been 2 weeks and not 1 week, to be quite honest with you. But we do we do have retail sales out of Italy and producer prices at the top of this next hour, or this hour, the top of the hour coming up. And then, of course, the granddaddy report of them all is the non-farm payrolls. Last month was 191,000. They're looking for 160,000. Average hourly earnings is supposed to still come in at 0.2. That's probably going to come in check. If it were to come in like 0.1, I don't think that's going to be the case. But if it were to come in at 0.1, then obviously we'd see the dollar pare back, which would suggest potentially additional cuts. Canadian trade balance, and at 9:45 Eastern, we do have ISM New York business conditions. And at 10 a.m. Eastern, we do have durable goods, factory orders, and final read on University of Michigan. So let's go in and move into the news, and then we'll look into the analysis. Dollar CAD's still holding up relatively well here. See, that made it up to 32.48. So Europe snagged on name for IMF job. European governments have started a series of internal ballots. I'm not really interested in that. Let's just stick with the name, with the markets. Just when you thought it was safe to go on summer holiday, President Trump launched a barrage of tweets that said he would impose a 10% tariff on $300 billion of Chinese imports from September 1st, the latest in the escalation of U.S. trade war. Well, wait a minute. Did I miss something? Didn't he just tweet a couple of days ago that everything was coming along pretty good? Did I miss something in the meantime? I think I had the discussion with Dale a couple of days ago saying there's not going to be any agreement. People have been hoping for that, looking for that for months and months and months, and people kept falling for that. And I said it probably wouldn't happen in our, maybe a bit of an exaggeration. But I told them we'll probably be all dead and gone by the time they reach a deal. But folks keep, going for that same dog whistle every time. But anyway, let's go on and move on. City economists estimate the tariffs would further reduce China's exports by 2.7% and drag down its economic growth by 50 basis points. The previous 25% on $250 billion worth of Chinese goods caused a 5.6% drop in exports and a 1.04% cut in growth. That capped off a critical week for global markets after the Federal Reserve much anticipated interest rate cut. Investors are suffering from whiplash and scrambling for safety. The 10-year yields dropped to their lowest since 2016, and 2-year yields plunged as traders increased bets on Fed cuts to another half point this year. The safe haven Japanese yen surged to a 5-week high against the dollar and a 2.5-year peak against the pound after Trump's tweets. The surge wiped out the dollar's recent rally against the yen. Assets considered riskier, like equities, have been punished by Trump's tantrum as well. All 3 major U.S. stock indexes fell in the CBO Volatility Index. VIX, a gauge of investors' anxiety, shot to its highest reading since June the 4th. Eurozone stocks was already on track for its worst weekly performance since last May before the tariff news. Asian currencies slide as Trump unveils more tariffs. Most Asian currencies tumbled on Friday as investors scrambled to safety after the U.S. President Trump said he would slap more tariffs on Chinese goods. Trump said on Tuesday he would impose 10% more tariffs on the remaining $300 billion on Chinese imports starting September 1st. Trump's propensity to agitate with his inflated, if not imagined, hand holding all the cards is a dangerous thing given that global trade is a house of cards. And China is not about to fall, said Vishnu Varahan, senior economist, Mizuho. Actually, I was just thinking the same thing just now because it's really not even a funny thing. I mean, I don't think that they were going to get a deal anyway, but the way he flips back and forth is just, I'm not going to go into political situation, we're here not here about politics, but really, like I said, this is just exactly what this guy said is just spot dead on, okay? And if you're one of those people that's hanging on to equities or whatever, do you want to, put your I don't want to say your fortunes, but your investments in the hands of something like this? You see what I'm saying? I would, I'm just saying, I would think, probably with this guy stating to a certain extent, I'd be getting the F out of Dodge. You know what I mean? Seriously. Senior Chinese diplomat Wang Ying on Friday said additional tariffs was not a correct way to deal with the bilateral dispute. Safe haven Japanese yen strengthened against the dollar on Friday as it marked sentiment sour to riskier assets. Japan finance minister warns against the yen gains and seeks FX stability. Japan's finance minister, Taro Aso, warned on Friday against recent gains and highlighted the importance of exchange rate stability after a surge in the Japanese currency threatened to hurt the country's export competitiveness. Japan's authorities tend to verbally intervene in markets to prevent investors from driving up the yen during times of increasing strains in overseas economies. The yen and Swiss franc are perceived as safe haven currencies and tend to be bought when the markets grow jittery. Also told reporters after a cabinet meeting he would not comment on currency levels while noting that the yen had swung by 2 yen in the past week. I think there'll be various impacts. At least currency stability is extremely important. We need to pay close attention to the market, he said. The Japanese currency hit more than a 1-month high against the dollar on Friday after U.S. President Trump broke a temporary truce in the Sino-U.S. trade war, sending shockwaves through global financial markets. Trump said he would pose an additional 10% tariffs on $300 billion worth of Chinese imports on September the 1st. This will surely affect China's economy, and which I think will have various impacts on global economy. Also said there's already a move among companies to shift factories out of China. It's developing into that just trade war, but other things. So if it warrants careful attention, well, I'm going to move on to the analysis. So here's the euro. We had a bias chart support yesterday at 1020. We didn't quite make it down there. We got as low as, what was it? Pretty close, 1027. Blake was getting long down here. I don't know if he's still long, but boy, what a heck of a good call here. And he had pointed out on the DSI, which, you know, if you're a subscriber with ForexAnalytix, Blake shares that every afternoon, had pointed out that the DSI, I think it was all the way down to, I think it might be 12 or even lower. But that being said, it offered the potential for a turnaround. And we did see a turnaround, which could probably potentially lead to more, depending on how employment numbers are perceived, and also the concerns with China may infer that it may, you know, hearken additional rate cuts, so those may be coming even sooner, or the assurance of those cuts. So it really opens the door for us to potentially move higher. In the meantime, we had this 1128 that was a key level before, so we're going to go with this is our resistance, 1128, which isn't that far away. I guess we could, you know, the right there. Let's go on this stretch, call it 1139, and let's see what we see as far as a fib. Okay, we just tagged the 23%. But let's take a look here. Yeah, right. On the stretch right here, we got 28, we got 44. So here's what we want to do. Right there, 1128.44. If we get that stretch. As far as support, it's going to be right there, 1058. 1058. You can make the case right here, but I'm going to go with this 1058 right here. Let's go move into the cable. Boy, look at this cable. It is just stuck to the ground with cement. No, my thought is the dollar might find itself under some pressure, so we're going to put this right here. Just a hair roll right there. 2092, 2092. Still have that 2065 that we saw there. Well, I'm going with 2092. And on the upside, do see the dollar weaken. Not that I think that the cable is going to take off, but we'll put it right there, 2206. If we see the dollar start to have some problems. Certainly the Aussie dollar is really in a precarious state here. The potential is to go all the way back down here, especially if this gets long and drawn out. The potential is that obviously the RBA will be cutting. So we're going to go with 67.45. The flash crash lows from January. Resistance will be 68.33. And let's go move into the keyring. Well, certainly this is really the potential to move and really all generate on this whole China row. We'll go right here. $65.10. Certainly we can make a dip down here, but there'll be a little bit right here. I mean, I'm not sure. Unless they're trying to push it and keep on going. Here's that major level, 64.93. Would seem likely that that's where they want to go to before bids emanate. Certainly that's what the market's going to focus on. There might be a little partial support here. We'll just go with the 64.93 because it's the end of the week. I don't see anybody trying to defend this, so let's go with that, the 64.93. Upside would be 65.48. Boy, we've seen the peso go. Look at this now. Remember we had that 1923.6 and we were saying, hey, look, mentioned in the chat room too yesterday, like, we need to get at least a close on a 2 hour Forget the daily, which we need a daily, but if we can get that above the two, well, God, we are smoking on this whole situation with China. Look at that. And the next upside is 1943. Let's go move into the dollar CAD. We had this 32.36. That's a key daily level here. Put it right there for 32.38 based on the 2 hour. But this is a key level here, yeah, because we moved it just right up to that nudge. Nudge right there. Let's, no. Yes, we're going to keep that 32.38. We will keep it for now. And on the downside, we had 31.87, and I want to stay with this too. We saw that on the 2 hour chart. So I like that 31.87. Let's go into the dollar peso. Well, you've seen here, we even marked this as a pivot yesterday. So we said if we can get that close above here, we're going to 1943, and that's going to be our buy chart resistance. Well, that's where it's going to go to. Is there a pit stop in between? Let's take a look. I think it's that, remember that 1932 when we had the Mexican finance minister? There's the 1929. I think it's right there. We had a level there too. 19, actually made all the way up to 1935. Let's go with 1938.5. I wouldn't necessarily put it this far out, but going into Friday, who wants to stand in the way of some of these moves? So that's what I think that we could see that continue to move. On the downside, $1920.2. And let's go to the dollar yen. Well, on a very, very short-term basis, we have some support here at 676. Of course, I think we're going to 630, but on a very short-term basis, 676. But I think that we could easily blast through this. So I really don't want to put it that close. Here's at 630. For right now, we'd be looking right there, 651. Let's go right there, 651. But 630 is 78%, so it's going to be 651. And on the upside, $7.32. The subside right there, 98.57. Let's take a look on the 2-hour chart. You see it right there, 98.57. If the wheels start to come off, that's where they'll find some support initially, which is 97. Let's just take a dip right there. Get those pointing no touches. 97.56. There's some support. This is key right here, 97.89. So let's put 89 and 56. With that, let's go move into the cross rates. Okay, you can see this Kiwi yen really coming apart here. So let's take a look here. Potential is certainly to come down here, and that would be our support, which is right there, 69.39. And for resistance, it's going to be right there. We'll keep it pretty tight, 79.08. $70.08. We even went past the 88% down here, obviously, and even took out these lows here. Let's 1758. That's where's a good level right there. Call it 1762 and see if we see anything else. Anytime before then. We got this thing coming down to easily 1815. $18.38 for now. $18.38. And on the upside, $19.14. Let's go on with the euro odd. We're right here at 63.41. That's a very, very key level. Let's take a look here on the intraday. Right there, you see it. 63, yeah, 63.59, 63.59. Support can be right there, 63.11. It's called 63.10. On to the Euro Kiwi. We're just about there also. 70.19. 70.19. Support is going to be 69.42. Let's actually, we can dip down here. 69.42. Aussie yen taking a pretty good little beating here. We're right into the 78%. We're exceeding it. Um, $71.80. Goes 73.13. Well, that's if they got things turned around here. Probably not likely. We just go right there. 72.97. Boy, what an unbelievable fall this pair is seeing. Um, 28.34. $30.19. Go with sterling odd. But the only thing that sterling can gain against 78.73. Support will be 78.07. Okay, and there's a bias chart for today, and good luck trading. I think it's going to be a fairly volatile day here on NFP day, and with obviously we have NFP, then obviously the moves that we're seeing in equity in regards to the whole U.S.-China trade row. And thanks for joining us here on the European Crossover webinar.